Hey, it's Mike with PriceActionTradingSystem.com, and it is, I believe it's Wednesday. I can't remember if it's Wednesday or is it Tuesday. It's Tuesday, March 17th. It feels like Friday. It's been a long week already, but it's Tuesday and it's March 17th, and we had another interesting day today. More strong volatility. At least we closed up today, which is says something. This is where we closed yesterday. So we closed up quite a bit actually from 24 something to, well, maybe we didn't close up as much as I thought we did, but hey, a positive close is something is a start. So, uh, but really off the lows of the day, this was a 200 point move right here. So, of course, this is a 100 point drop back again, and then we just kind of went sideways and we closed up a little bit from that back from backing off there as well. Really, we spent most of the day going sideways. Really, from 10 o'clock on, we're just kind of up and down sideways here. So, and that's that's typical. You'll see some congestion. The market doesn't just go straight down or straight up. It'll trade down and then the market will digest that move or trade up and it'll digest that move for sometimes a day or two. At least a normal market does. This market's not normal, so who knows? We did talk about possibility of, is the market going to close? Are they going to keep it open? Well, the Treasury Secretary put out a statement today saying that the White House is committed to trying to keep the markets open, even if at the very least they may reduce the trading hours or something. So hopefully the market won't close completely. What is that going to mean for us? It's hard to say. It changes daily. Yesterday, there were periods of time where you probably didn't even want to trade. Today it was a little better, and they did relax the margins again. And that they're still double. I think AMP was like 900 per contract. I don't know if they ever relax that anymore later in the day, but you don't need but a trade or two in this stuff if you catch the right move. So just remember that you don't have to be in and out of the market constantly. You just need to find you a good trade or two. And really, especially when the margins are, when they make those margins full margins, there's a reason, because it's dangerous, and there's a big chance of people losing a lot of money, and that's why they increase the margin. So just keep that in mind. That might be that might be what you use for your trading decision, if you want to trade or not. If they've got a full margin, then that means it's probably pretty dangerous, so you might want to stay out. And even doubled really changes the size your account needs to be as well. So just keep that in mind as well too. And if you're not a really experienced trader, I would tell you you're probably better off just to sit on the sidelines. That doesn't mean that you don't sim trade this. You don't want to waste the opportunity to hone your skills. So by all means, if you've got a simulator or you're trading with a broker where you can uh, do simulated trading on the live data, by all means do it. So when somebody asked me a couple of things, somebody asked me, um, should they be sim trading? Well, of course you should. If you're sitting at home and you got nothing else to do and you're watching this market and you can sim trade it, by all means do it, because if you can trade this market and follow the rules and do it and be successful, when it slows down, it's going to be really, it's going to seem really much simpler than it is now. So yeah, by all means, if you can sim trade, sim trade. So when I say don't be careful trading and don't trade, I'm talking about trading live. So I mean, the worst that happens is you blow your sim account, and if you do that, you just reload it again. So that's no big deal. Uh, so we're not worried about sim trading. We're just worried about trading live. So, and it looks like that they're, you know, committed to keeping the market going. Again, they may reduce the hours, and what that'll mean, we'll just have to wait and see, because I don't remember that ever happening. So with reduced hours, maybe the volume dries up, maybe everybody takes a vacation. Um, I don't know. My guess is it seems like when they do increase the margin to full margin, that things slow down a lot. Well, I shouldn't say a lot, but you don't see some of the craziness in the that we have been seeing. So maybe that is keeping a lot of the small, a large number of traders, small traders out of the market, and maybe there's so that does slow it down some. I don't know. It's just something I noticed that it seems like every time they raise the margin that things slow down slightly. I mean, you don't call this slower, but of course they did switch it back at some point today, and it was pretty early on. I can't remember when they switched it back, but I definitely wouldn't trade this thing after hours. As I always say, anytime after about 7 a.m. Central Standard Time, you're probably good to go. Anything prior to that, after the market when it reopens around 3:30 my time, anything from there through about 6 in the morning, I'd still clear of it because there's just not enough volume and there's crazy moves and it doesn't act the same as it does during regular hours. So I'd be careful trading that. I don't trade it at all, and I tell people not to trade it. Usually people don't listen; they have to learn for themselves. But I mean, it's like anything I tell people; they never listen. They always think they're going to be different, and they never listen. And then they go do what they are going to do anyway, and then they come back later and says, "Yeah, you were right." So, um, but I wouldn't tell you that if I didn't believe in it. So it's just whether or not you believe me, I guess. But I don't actually. I don't really think that's true. I think not that most people don't believe what I tell them. It's just they think they're going to be different. Everybody thinks they're going to be different. I tell people this takes you a while to learn, and they always think, no, not me. I got a 180 or a 210 IQ or whatever, and trust me, that's really a detriment to you because that'll help you with common sense kind of stuff and for learning stuff, but it doesn't really help you a whole lot in the markets because they don't operate by normal common sense. What you think is normal is totally opposite in the market. So I think it's actually a detriment to some people because they're used to being right and learning everything, and then they come in the market, so they think it's going to be the same way. But I don't have any data to back that up. That's just me talking. So take that with a grain of salt. But I've been doing this a long time, and I've seen a lot of people come and go, and uh, I've seen enough of it to know that I have a pretty good sample to measure by. So but that still doesn't mean that I'm right. So you take it for what it is, just my opinion. So um, what else was I going to talk about today? I was just going to back out and kind of show you. I wanted to show you a spiking channel. Most of you are probably going to know what a spiking channel is, but when the market shoots straight up like this and then starts a little channel, notice there's a spike up and a channel right here on this lower level, but there's also a spike up and the bigger two-tiered channel because there's another trend line here, but this was a shorter term one, and that's why we call it spiking channel. It actually spikes up and goes into a channel. And you'll see the same thing to the downside sometimes. Just seeing if I see one here. I don't really see a spike in channel down today. But the same, you can get a spike in channel up or down, but it'll spike down and then go into a channel or whatever. It'll spike up that's a great example of a spike in channel. And this is just a short-term trend line up, and then it flattens out a little bit, but it's still a little bit steep, and then it flattens out more to a 45-degree angle. And so you can see it working off this trend line all the way up here. And it just turns out to be a two-tiered channel, and eventually we kind of overshoot the high, and then we reverse, and then that's when it just kind of chops up and down here. But you can see it working right up that midline there, working both sides of that line. Tells you this accurate. And I was going to show you a couple of second entries just to go over those again. It's amazing how hard people make those, but they're hard to describe, so I get it. But there's a couple of them right up through here. Notice that you made a new high right here. This swing is higher than the last one, which is really, that's a swing there, but definitely right there. So your count's 0, and then you're backing up, and there's your first entry. and then you back up again, and when it breaks higher there's your second entry. And then you make a new high, counts 0. You're pulling back, your first break higher, first entry. And then you start going lower again, and a perfect second entry long right there at the EMA. Look how it takes off there. Makes a new high right there, counts 0. You're working back, breaks higher right there. There's your first entry, and it actually breaks higher right there as your second entry. And this is a good example of why I like to use my, I want my signal bar to be a trend bar in my entry direction, and I use that to screen my trades. And notice what happens if you go long right there. There may still be enough there to scalp out, but in a regular market it wouldn't be, and it would have backed up and stopped you out there only to keep going higher. So keep that in mind, that you want to use your signal bar to help you screen your trades, or filter your trades, I guess is what I should say. But notice we run on up, we make another new high right there. Actually, we made a new high right there. That one's higher than that one, so that's technically a first entry right there. But you never get any, it keeps going higher and makes another new high, so you never get anything more than a first entry. And if you're counting here, notice you're coming back first entry, you're coming back again, and then there was your second entry, but you made a new high, so the count starts over. And so that's a first entry. And then your count starts over right there because it's a new high. Pull back first entry, you pull back again, and when it broke higher right there, another nice second entry up. And then it actually does not, actually it does make a new high right there. That's higher than that high. So you got a new count right there, and you got a first entry. Working up, new high, so a new count, first entry, and then you actually get a second entry right there before you get a new high. It's not a very good setup, way away from the EMA like that. Again, it probably would have worked today, but it's not a very good setup. So then it runs down, it makes a new high, counts 0, runs down, first entry, runs down, second entry. And this is actually your signal bar right here because it made a lower low right there. That makes your swing low. So there's you. It was actually a second entry though when it broke higher right there. I don't know if that went lower or higher first. So if it went higher first, you'd probably want to wait for this bar to end and then go long one tick above that. If it actually went lower first and then turned and went out, I wouldn't have a problem with you going long right there on a buy stop, because that's the first break of this big spike in channel working up. So you'd expect it to probably try to make a new high. And it runs up. It does make a new swing high right there. It's higher than that one. This swing high is higher than this one. So your count's 0 again. Pull back first entry, pull back, and there's a nice second entry right there. And this is why we put our stop where we put it. Notice that it prices back up again there, but they can't get below that swing low. And that's why we put them there, because it tends to protect your entry and your stop, because otherwise if you'd have tightened it up anywhere in there, you'd have got stopped out before it went on higher. So second entry, now you make a new high, pulls back, and there's the first entry right there. But here's a great failed second entry short. Notice that you made a new low right there. That swings lower than that one. So on the bottom side, your count's 0. There's a first entry right there, and you go up here, when it broke lower, there's a second entry short right there. So when this thing breaks higher right there, you can treat that as a failed second entry short and go long and look at it go. It traps shorts right there. Notice how that thing rockets up real quick. The shorts were all looking to get short again, and they get fooled, and they all have to exit. So it runs on up, makes a new high, and you're coming back first entry. And then there's a second entry long right there. Again, not a very good setup because you're going long right in. Again, it's maybe enough in there that it works, but that's not a very good setup. So anyway, I hope that's helpful again on the second entries. And then notice every time we came back to this trend line, and that's the other thing, where do all your big moves happen at? And you'll hear me say it all the time, the key entry points. So you're really waiting on prices to come back to these key entry points and give you a setup. And notice where the big moves came from. Had a pretty good move here off the key entry point. You came back to it again. That's where this whole big move started from, right off that trend line, the key entry point. Runs up. The EMA can also be a key entry point. Big move right there. Pretty good move right there. Then we're just kind of swinging back and forth on it, back and forth above and below. And when you're doing that, the market's not trending anymore. It's sideways. So just, you right here, you might look at this as a failed break lower. I don't have my lines on there, but this is mostly sideways right here. So you can see that. So you're looking for shorts off this or longs off this. And because the overall trend is up, you may just be looking for longs. So I'd be real picky on any shorts here. But notice you get a little failed break lower right there. And that's a key entry point, that support level right across there. And look at it go again, takes off. Same thing here, you're just kind of shooting sideways and you kind of drop down and get a little triple bottom right there, and off it goes again, and we're headed to the upper side of the two-tiered channel again here. And that's another thing, I don't mention that very often, but I probably should, is that if you have a sideways channel like this, or even tighter like this, I call this congestion, but they're the same thing, they're just sideways action. If you trade up into that, the odds are, when you break out and succeed, you're probably going to go the same way the trend was coming into it. It's not 100% like anything, but that's generally what you can expect. And you can see here, we traded up into this sideways and it failed out the bottom. I always tell you those end up to be important lows, or if it fails out the top, it might be an important high for the day. And look, that was the low from about 1040 or so. It was all straight up. And we're around 24, 50 or so there, 55, and we went all the way to, that's almost a 100-point move. So, so that was definitely an important low that I always try to tell you about those things. It runs up, and now you got a trend working down. And this is a little bit of a spiking channel down right here. You can see that trend line working right down through there. That's pretty much it on the other side, probably. Actually, this might be, let's look at one other thing. This might be two-tiered here. And that's what it's looking like. Looks like it's two-tiered. And notice how we spiked down and went into this two-tiered channel all the way back down. So now you're just looking for second entries on the downside, or failed second entries to the upside that turn down at this key entry point. And when you get the trend line running in conjunction with the EMA, then you got confluence there. So you got even more reason to use that as your resistance area where you're looking to get short. And notice this new high here, you come back, you get a first entry, you make a second leg. There's actually two perfect measured legs down, and you come back right here. Even though it's a first entry, that's a failed second. You can treat that, it's really not a failed second entry, but it's still two legs down, and you should continue going higher there. But the fact that you don't, you can treat it like a failed second entry long and look at it go, boom, and just runs down. Then you make this new low here, and you got a first entry, and you got a second entry right off the key entry point, EMA, the midline here, and look how bearish that bar. That's as good a setup as you'll ever see. And you would have had a runner there, and boom, off it goes. So anyway, we've already got about 20 minutes worth, and once the market goes back to normal, we'll probably start talking about, I'll probably start marking all the trades again, but it's just so crazy right now, and so much going on. It's just too much work, and it's not, I don't think it's as effective just to show the trades right now. I think maybe coming in and doing what I've been doing, showing you how to do the trend lines and showing you some of the other stuff. A lot of you have asked for that, so I'm trying to I'm trying to accommodate that as well. So, but maybe it'll get back to normal here, and we'll kind of start doing our normal thing. And I may even get to where I just pick the first hour or two and point out some trades and things like that. So, if there's something you want to see specifically, uh, drop me an email, and I'll try to do that while we're still, while we're kind of out of our normal routine here. So, anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.